Good morning, everyone. Welcome to August 3rd Market Minute. I'm John Hopkins, president of Invested Central. Right now, we get the Dow futures up 102, the S&P futures are up 12, and NASDAQ futures are up 25. Asian shares were mixed while European shares were higher overnight. Futures were higher prior to the open on Thursday as the bulls looked to get back Wednesday's losses. Weekly jobless claims were in line, but developments in Europe put the market behind the eight ball. Stocks could never catch a bid, and by the time the market closed, all of the major indexes were lower. Today we'll get weekly non-farm payrolls and the unemployment rate at 8:30 a.m. and the ISM services at 10 a.m. Today we'll get earnings from Procter & Gamble. On the S&P, we've got the 20-day moving average at 1361, the 50-day at 1340, and the 200-day at 1321. The S&P closed at 1365 with support at 1361 and resistance at 1400. Early on Thursday, it looked like the bulls might be able to get back some of Wednesday's losses, but that was put on hold when the European Central Bank hedged some on their plans to prop up the euro. Also, the Bank of England held rates steady, and that 1-2 combo made traders unhappy. Accordingly, the S&P dipped below its 20-day moving average before closing at 1365. Everything could change once the job numbers come out later this morning, but as long as the S&P holds 1361, the bulls will retain the technical edge. A close below that level could take the market lower, but get the S&P back above 1391 and we could have a different ballgame. We're about to close out another week, and so far the bears have controlled the action. The question now becomes, will they also control the month, as August has a reputation as being tough on the bulls? We could see the same thing this month as well, but pay more attention to the here and now rather than what happened in the past. This is John Hopkins. I'll be back Monday morning with another Market Minute.